Hi, this is Larry Shover for Trader Exclusive. Well, here we are towards the end of the day. The S&P 500 close to unchanged right now, down about 3 points on the day. If it closes in the red, this will be the first down day in the S&P since February the 28th. What's important to recognize right now is that we've seen severe underperformance in home builders and the railroads. But do keep in mind, home builders especially rallied 7% last week on some great data. On the other hand, safety groups like pharma and telecoms outperform the market, keeping the Dow and the S&P 500 in check. Right now, volumes are very, very light. I mean, on one hand, it's a little bit panicked on the floor. It seems like the S&P might be down 2%, but it really isn't. It's almost flat. I think a lot of that is everybody is waiting for that next shoe to drop. We've lived through such a long period of calamity, calm, calamity. Everybody seems to be waiting for that next shoe to drop. I personally am waiting for something different. I think the macro environment is out in the open. Everybody's completely content with the containment in Europe, the U.S. numbers, and China's softer landing. I think the bigger picture for the S&P 500 going forward is who is going to pick up the baton, or what's going to pick up the baton. Personally, I think that's going to have to be growth. We're going to see our first big growth metric March 21st with flash PMIs, followed by April the 8th with the start of earnings season. So personally, I always think that slow and steady wins the race. However, I would take some money off the table waiting for better pricing in the S&P 500. I'm Larry Shover for Traders Exclusive, reporting to you from the CME Group in Chicago.